Hello. I've had lots of conversations over the last, let's call it 6 to 12 months about the market and interest rates, and I think I'll just wait. I think I'll wait to buy because until rates come down and it'll be more affordable, just a more attractive opportunity. Well, I don't think it's a great time to wait, and I'm going to go through some charts here talking about that, but just kind of wanted to take a look at the real numbers. What's happened with interest rates over time and the median sales price in America over that same time. So let's take a look at some charts here. Okay, first one out here, 30-year fixed interest rate, 1971 to current, and that start date is because that's when they started keeping records. Okay, so you can see we were about the same level we're at right now, kind of low sevens. And if you waited then, whew, rates really jumped up, and they eventually came down and it got us into a better spot. But that's one of those things. Again, we're waiting there. What would have happened to the average home sales price, medium sales price? Excuse me. It just went up that whole time. It's just gone up, 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 up. So we know over time, median sales price in America has just tended to increase. We've had a couple of decreases, but for the most part, just increase. Okay. So let's look at current times right now. January 2022, the Fed started raising the Fed funds rate, and rates went up. Okay, and they've kind of held steady up here. So if you're looking at this saying, yeah, but I want those rates down below 5, below 4, like we had before, what's that looking like? What's the chance we're going to see something like that happen? Well, let's go back to this initial chart here, 1971 to current times. And here's this box here where we went through times from, 2010 to 2022 were these low rates. Okay, we had this nice period in here. Well, what was going on during this time? Well, the Fed was implementing their quantitative easing program. Okay, so quantitative easing, what that means is the Fed started buying mortgage bonds. And the idea was they were increasing demand for mortgage bonds, therefore pushing the price of mortgage bonds up and yields or our interest rates lower. They were aggressively trying to get interest rates lower to stimulate the economy. So you can see this was the Great Recession, and they were working hard to get the real estate industry back and rolling again. And then we got pretty low. We bounced up a little bit, but stayed pretty low because quantitative easing was still in effect. And then we hit the pandemic, and the Fed got really aggressive with their quantitative easing, and we got to those super low rates that we were at. Well, then the Fed started raising the Fed funds rate, and they started tapering off in their quantitative easing. And now we're in this area here where rates are higher. There's no more quantitative easing. The Fed has dropped the Fed funds rate a bit, but they're kind of in a pause right now. So when you look at this idea of getting back to these rates, not very likely. In our history, we really weren't ever below 5 leading up to this period right here. So waiting for those rates is not a good move. Okay, so let's get back to this period of January 2022 to current, where the Fed raised rates, they cut off quantitative easing. What's happened with the median sales price? Well, it's been a little erratic, but overall, we're still higher than we were when the Fed started that program. So the median sales price has still continued to move higher despite these much higher rates than we were seeing in that 10-year previous period. Okay, so let's look at an example of the time period 1971 to 1993 with this whole notion of what would have happened if you had waited to lock in, waited to buy. Well, again, rates were about the same level that we're at right now, and they went up. So it would have taken you until 1993 to get back to a rate that was comparable to 1971, 22 years. Okay, now that may be an extreme in terms of time period and what was going on during that time, but it's still a good point for illustration. What happened to the median sales price during that time? It just went up. So if someone didn't take advantage of rates around this time and they waited and then had to wait a long time, they lost a lot of value in their home during that time. So waiting was not a good move then. Okay, so let's go back to this chart here, again, back to our overall chart. If this period here is not likely to be repeated anytime soon, then we're probably looking more at this time frame as a good example for what we're about to face. Doesn't that look about what we're looking at right now? So let's just take a look at at this time frame. So 1998 to January 2028. Okay. Rates again were about where they are right now. So if you didn't take advantage of it right now, well, you might have had an opportunity here, but look how short-lived that that bounce was. And then it just went up, 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 up. And it took a long time to get back to that 7 level, and a long time to get back to that brief period there. So someone could have bought here, been protected all the way as the market went up there, and then taken advantage of a refinance here, or more likely a refinance down here and again. So if you got in at that point, you were in a really good spot to just ride out what was going on with interest rates. And all the while, home values continue to rise. So they were still going up. So you got in at that nice level, and then eventually, eventually had a chance to lower your rate and still take advantage of this increasing median sales price. Okay. So looking at this again, we're just looking at a period of time here where we're not going to get back to this level, barring a crisis. We're not going to get back to this level again. We're going to be around in this area. So it's good to take advantage of it, get into the market, start building that equity, take advantage of that median sales price that's going to continue to rise, most likely. And then look for those opportunities to refinance and get to a lower rate, because they'll be there. They'll happen. You just have to be ready. So hope that's helpful for you. Just kind of looking for ways to help explain what's been going on in this market and why it's still a good time to buy right now. Take care.